My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I've been my friends. I'm just trying to make you a little extra money here. My job, not just to entertain, but to educate and teach. Call me 1-800-743-CNBC. Tweet me, Jim Cramer. When people think about an exciting time for stocks, they think of the next 2 weeks. That's when some of the most important, consequential companies on Earth report, practically at the same time. Throw in the actions of the new president, and all I can say is we are not going to have any idea what the heck we're doing until we have time, probably at night, to sift through all the data points and study all the conference calls. Yes, 8 times a year, 2 weeks a quarter. You have so much information to deal with that it's impossible to not make mistakes. Unless you take my advice and do nothing but listen. It's the only way you won't hurt yourself. Compared to the next 2 weeks, today was easy. Dow dipping 141 points, S&P declining 0.29%, NASDAQ losing 0.5%. And NASDAQ, did I mention the NVIDIA's down? Okay, there, I said it. All right, now, what is exactly the game plan? Well, what I've done is truncate it and just focused on some of the bigger ones, but there's so many others that I could have focused on. We don't have all day here. Next week starts out calm enough when we hear from fan favorite SoFi on Monday morning. Now, I've been championing this fintech company and CEO Anthony Noto for ages, but it was one of the most heavily shorted stocks out there, and they've been keeping it down for no reason. I expect good numbers, and the shorts are going to continue to be routed. AT&T reports, too, and given that Verizon it didn't stink up the joint, I have to think AT&T will be fine. Tuesday morning, we hear from General Motors, which delivers usual great numbers, and after a nice opening, it will drift down and remain one of the cheapest stocks in the S&P because, in the end, it sells cars. And the market only has eyes for one automaker, Tesla, and that's got nothing to do with the car business. After the close, we hear Brian Niccol lay out his vision for Starbucks. Now, we own the stock for the Travel Trust, and I think it might be worth buying after we hear the new plan. I believe in Brian. He did an incredible job turning around Chipotle, and I bet he can do the same thing with Starbucks. Remember, when I said this week's too difficult for snap judgments, the Federal Reserve doesn't make it any easier on Wednesday when it tells us its next move. There was a time when we thought that we'd be getting a nice rate cut right about now and the stock market would plow forward. But when American Express says today that its millions of customers are spending like mad, the Fed can't possibly give us a rate cut, can it? Now, if they do cut on Wednesday, it means Jay Powell has caved to President Trump's demand for immediate rate cuts. Too crazy for this guy, people. Good day to sit on your hands because it's a no-win situation for Powell, and I don't want to get caught in a Trump-Powell dogfight. At least Wednesday starts with the predictable, which is T-Mobile's earnings. Lately, the stock's been beaten down. That's precisely when you got that's the best setup for the stock if you want a post-quarter rally. Now, same goes for ServiceNow. Now, ServiceNow, let's listen to this. This is the quarter where ServiceNow will report a number that sends the stock down in after-hours trading, and you have to buy it right then and there because it will rally huge at the opening the next day, Thursday. Time and time again, this happens. It goes down after the evening report. Why? It's pushed down by short sellers trying to keep it down. And then it opens up gigantically when the shorts again are routed the next day. ServiceNow doesn't even know how to miss. Set your clock to this one, at least until some company actually attempts to compete with their artificial intelligence savvy. Buy that dip. And I almost never advise buying after hours, but I'm doing it right now for ServiceNow. How about two wild cards? First is Microsoft. Now, this has become a battleground stock because its aggressive data center build-out, a so far failed AI PC, got to call him as I see him, a possible fallout with OpenAI, and the possibility that Copilot is nothing but Clippy 2. Yes, that little paperclip that almost ruined Microsoft Office in the late 90s. I keep trying to figure out how CFO Amy Hood can be positive to her on her part of the conference call, which is really, frankly, the only part of the conference call that matters, because she handles the guidance. And the guidance is the guidance. We pared this one back for the Travel Trust, and if it weren't for the fact that Microsoft has an installed base to beat the band, I have to tell you, we would have sold our entire position. The second wild card, Meta Platforms. I think the company will talk about dominance, visceral, raw dominance, both on the top and the bottom line. Look out, TikTok. You think you're so darn hot, but Mark the Hunter Zuckerberg has you in his sights. I, for one, am glad that Zuckerberg's an American. I bet he does the quarter in Oakley A's. You know the Oakley A's? They're cool. I have the Ray-Bans. I don't have the Oakleys. Apparently, you can't get them yet. All right, then there's Tesla. Now, I think Elon Musk, get this, I think he could sell tickets to this conference call. He could command $1,000 easy. The last time Tesla reported missed numbers badly, and then it proceeded to have one of the biggest runs ever. Just soared. Right when I reported that number, and I've got to tell you, I figured it out. Actually, Morgan Stanley's Adam Jonas figured it out for me. He calls Tesla after that quarter an AI ETF. People want an AI ETF, so they buy the stock no matter what, especially if it's down the next day. I want you to own Tesla. Just own it. Thursday morning starts with Caterpillar, which is conference call stock, meaning you can't make a decision until you hear the call, because that's where you learn about the future. I think the stock's had an amazing run, but Cat's no longer cyclical. It's a secular grower because CEO Jim Umpleby has maneuvered his business into more consistent end markets. I said this yesterday at the beginning of the CNBC Investing Club conference call. After the close, we have the most widely anticipated disappointment that I've ever seen. I'm about to be facetious. I want you to hear this. It's facetious. But here's what we're going to hear. Let's see. We have horrendous Chinese cell phone orders, no lift from new AI, a surprising slowdown in service revenues, lackluster Vision Pro sales, and, of course, a radical chop to the forecast for the rest of the year, all way below the consensus. There. That's everything I've heard about Apple for the last 2 weeks. I just hear, and since the year began, I just keep hearing that over and over again. But if everyone knows it's going to be worse than expected, can it still be worse than expected? How can it be a surprise? If everyone expects the worst and we get the worst, will the stock still get clocked? Kinda, yeah. Because Apple's priced for slightly better than expected set of numbers, and we won't get one. But so then why not dump it? No. I still say own it. Don't trade it. Because I believe Apple's an amazing company with amazing management. Whatever goes wrong will be fixed. I just don't know when it will be fixed. Historically, you're better off sitting tight than trying to trade this one. My Travel Trust has such unbelievable performance in the stock precisely because Apple controls its own destiny. Not that hard to do when management's fantastic and the product's superb. Oh, Intel reports too. Let's hope they have a way to raise cash. Different story than from Apple. They need it. Their balance sheet's heinous. You can't own the stock until they fix it. Finally, Friday brings numbers from oil giants Chevron and Exxon. I don't want to own the oils here because who knows if they cave to President Trump and start drilling like mad. I think they're going to stay disciplined. But if Trump wants more drilling, do you think he'll pick one of the little guys? No way. He'll go straight to Exxon and Chevron. Oh, and if it weren't enough for this week, we got the Fed's favorite inflation gauge. That's the PCE deflator number. And I think it won't be cool enough. Too much spending for that to happen. The exhausting bottom line, look, it's a sheer hell week. Our heads will be spinning swivel-like, lazy Susan even, as each day you can expect a flood of earnings and a soundbite from President Trump that upsets whatever order there might be. Like I always say, don't try to make decisions during this part of earnings season. Just listen. It's too hard, and I don't want you to lose money just because this is one of 8 super exciting weeks of the year. Bob in Tennessee. Bob.
Jim, good to talk
Bob.
to you.
Same.
I'm one of the founding members of your club.
We love founding members of the club. All right, let's hit it.
Bristol Myers. It's up 40% over the last 6 months. The market value is $120 billion. The enterprise value is $163 billion. Do I hold it?
You bet you. No, you don't hold it. You buy more. This Cobenfy I'm telling you, this is a radical new drug. It's the first new drug for schizophrenia we've seen. It works much better than the others. No weight gain. And I think it's remarkable. 4% yield and a guy, Chris Berner, who I think is dynamite at the helm. I'm not telling you it's a schnitzel, buy, sell, whatever. I like Bristol Myers. Let's go to Alex in my home state of New Jersey. Alex.
Jim, I got to thank you for all that you do for us novice investors. But I want to ask you about Hershey. Hershey, what do you think? I mean, they have a lot of pressure with the cocoa prices going up. We know they're hedging against it. Supply chain crises. We know the energy prices you talk about all the time.
52-week low. 52-week low today, 3.6% yield. That doesn't protect against anything because you know you can get a lot more for interest rates. The stock the numbers can't be made. Still sells at 16 times earnings. Wake me up when it sells at 14 times earnings, and then I might even consider it. If you have to own sweets, go own Mondelez. Okay, just own Mondelez. I like the Tate's cookies. They're very good there. And I did Toblerone. They had Toblerone in the office today. I didn't have any. They took it right from me. I did have ice cream. First time in the office in maybe 19 years. Let's go to Ben in Florida. Ben! Ben!
Mr. Cramer, appreciate your call from Monmouth County, Jersey to Montgomery County, Pennsylvania.
Oh, my. Springfield High School to the championship. Let's go.
There you go. There you go. Hey, can you tell me why it is that nobody has any respect for PayPal? And go Birds.
Go Eagles. I have no... Look, I tell you, this person does have respect for PayPal. They have a meeting in February that is going to blow your socks off. I have to tell you that I think that this guy, Alex Chris, is the real deal. It's at 89. Buy some now, and if it does happen to come down before February, buy more then. I have total respect for PayPal and total respect for Alex. It's a good stock and a good company. All right, leave it to Ben to know that. I want to thank Ben. Next week brings a flurry of earnings. Pair that with the Trump news cycle, which happens every day. It's the spin cycle. It's kind of like my washing machine, and you're going to have to practice patience. I know it's hard, but it's going to be a virtue. On Mad Money tonight, Intuitive Surgical, ISRG, fell on yesterday's report. So is this chance to buy a dip of one of the greatest companies, like one that I love? And hey, what's the investing club doing to take action on this move? Because, man, are we ever tempted? Then, NVIDIA backed this little-known AI stock. But should you? I'll reveal the new name of it. And tell you whether it's worth eyeing. Plus, I'm giving you a behind-the-scenes look at the CNBC Investing Club as I take some members' questions left over from our monthly meeting yesterday. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.